Welcome to Looking at the Markets with David Moadel. A lot of people buy after a big run-up in the price of a stock. In other words, if the price of a stock or ETF or whatever goes up a lot in a day or in a few days, then they say they're bullish, they're feeling really confident about that stock, and then they'll want to buy at that moment. But is that really the time to buy? Well, let's look at some examples. Right now, Netflix is on a tear. As you can see in the recent price action, there's this big candle here a couple days ago. And yes, if you had bought after this big candle here, and just it's in an overall uptrend here. I mean, you can see in the past week or so, it's just been up and up. And yes, if you had bought here, today was another fairly big candle, and so you would have done well. But is that always the case? Well, let's look at history. Let's look at the past. I mean, here's a big run-up. What if you had bought at the tail end of this run-up, after these four big, not big, but after these four candles here, these four, price movements upward? If you had bought around here, you would have suffered a big loss all the way down. And you would have recovered it eventually, months later. But this is a good example over here in May, at the end of May, of how buying after a big run-up is not necessarily a great idea. Alright, here's another big run-up. You can see several candles in a row where it was just up and up and up. But again, if you had bought right after, let's say this gap up here, if you had bought right afterward, it would have gone sideways a little bit and then straight down, and you would have gotten your money back. But imagine instead if you had bought after a big down move. Like, for example, if you had bought around the 86 or 87 area here. It bounced right off of this area several times. Now, that's no guarantee that it will continue to bounce off 86, 87, 88. It's no guarantee of that. But I'd rather buy at a low price than buy at a high price. Let's look at Twitter as another example. What if you had bought after this big gap up here? If you had bought right here? Well, yeah, it went up a little bit more. Sure, and it might still go up. But what if you had bought after this big run up, right around here? Well, you would have had a little bit of a loss here, and then almost a recovery, but then more of a loss. And yes, you would have recovered your money after these down moves. So again, I challenge you to consider buying after a down move. Look at this gap down. If you had had the guts to buy here, after this big gap down, you would have done quite nicely. Here's Apple. If you had bought after this big run up here, well, it's gone sideways so far. Not a lot of upside here. How about after this big down move? If you had bought, of course, if you had bought down here in the 92 area, 90, 91, 92 area, it's bounced off of that area a couple times, on this chart at least. So that would have been a great area to buy. But again, it takes guts to buy near the bottom, to buy after a big down move. But think of how much money you would have made if you had bought after this big red candle, and you would have benefited from this big run up here. If you had bought down here, you would have had a huge run up if you had held on. And here's Priceline. Now Priceline's interesting. It's been going up and up and up slowly. What if you had bought after this gap up here? You would have had a little dip here, higher highs. Sure, okay, if you had held on. But imagine instead if you had bought after this big gap down, you would have done well. And then if you had bought after this big gap down, you would have done very well. You would have enjoyed this run up here. So before you consider, here's another example. Look at these five higher closes here in a row. But if you had bought here, you would have had 5 lower closes in a row right after that. So if you're considering buying after a big run up, how about instead buying a really good, profitable company, high quality companies, high quality stocks and ETFs after a big down candle or several red candles after a big down move. That's only if you believe that the stock is going to go back up. And good companies generally do, if you're willing to hang in there and if you have the guts to buy at low prices, which is what I like to do. If you'd like some help with this, or with knowing when to buy or even what to buy and when to do it, or if you'd like help putting together a trading plan, you can send me an email anytime. My email address is davidmoadel@gmail.com. If you like this video, please give it a thumbs up on YouTube. You can leave a comment. I like to read your comments on YouTube. And subscribe to my channel so you can receive the latest updates on my financial educational videos. Thank you so much, and I'll talk to you soon.